Thanks, Rose. Good morning, or I guess it's afternoon now. Good afternoon, everybody, and welcome to our webinar. I'm Fiona DiDomenico, Regional President with Castle Group, and we are going to have a great session today based on all the questions that have already come in, so thank you so much. Keith and I will kind of be walking you through. Keith will be doing most of the heavy lifting, but I'm going to be monitoring all your questions as they come in. And hopefully we'll get to everybody. If we don't get to every question, don't worry. We absolutely will follow up with you after. We're going to kind of group the questions together because some of them are similar. So we'll try to pre-frame those and make sure we get all of your answers. So again, I'm Fiona DiDomenico with Castle. And Castle, for those of you that don't know, is a privately owned company. We're based here in Florida, and we have over 300 communities that we work with throughout Florida and Texas. So for those board members that are already with Castle, thank you for joining us today. And for those of you that are not, we would love to help you out. If you have any questions at all, just send us an email at info@castlegroup.com. We specialize in communities with staff on site. A lot of our communities are large scale. They have amenities on site, whether they would be an HOA or a condominium. And we've got over 1,700 teammates with specialties in information technology, lifestyle services, food and beverage, high rises, large scale HOAs. So we would be honored to help you out in any way that we can. And with that, I'm going to introduce to you Keith Skorowitz with Appleton Ross, who's been generous enough to give us some time today and his expertise. So Keith, welcome. And if you'd like to introduce yourself and take it away.
Sure. Thank you, Fiona. Good morning. Well, good afternoon, everyone. My name's Keith Skorowitz, a shareholder at Appleton Reese here in Tampa. And I'm going to jump right in. I do want to say right at the end, there's a slide, Fiona, if I'm not mistaken, that has our contact information on it. So if I don't get to some of your questions, feel free to email me. I'll do my best to get back to you. I understand that, you know, I like to say this all the time, is that each one of your associations are like snowflakes. Everybody's different. You have different layers. Everybody has different sets of governing documents. So to the extent you have a particular question, I'd be happy to help you offline. I do have a list of everyone's questions that came in earlier, and I'll do my best to try to address them and work them in as we go forward. I wanted to start by saying we're going to cover a lot of ground today, and you may have heard the phrase, how do you eat an elephant? Well, you do it bite by bite, and that's what we're going to do. We're going to take this in little chunks, and we're going to make this very manageable. A lot of the questions I saw had to do with how do we deal with budgets during a pandemic. Frankly, it's not that much different. It's getting in front of the issues that the pandemic can cause or has caused. So we're going to lead off with a little bit of special assessments. I'm going to recommend that everybody have a little fireside chat or get cozy by their pool with their documents in the next month or so. It's really important that you understand your special assessment structure, because if you are under budgeted or you cannot meet your bills, this is where you will end up. This is the shock to the system that we're going to try to avoid. Special assessments, for those of you who don't know, and I realize that it has its own, special assessments has its own feeling, but we want to try to stay away from that. It's a tool that's in your toolbox, but we're going to try to stay away from that. So with regard to special assessments, I would urge you to get with your manager, talk to your other board members, and try to understand what are the limits on special assessments. Are there special requirements? What type of vote does it require? Is it a board vote, membership vote? Check your bylaws, check your articles of incorporation, and check your declaration, and make sure there haven't been any amendments before you got on the board that you're not aware of. Special assessments also can reduce the pool of buyers in the event that you have to pass one to meet budgets, and that makes negotiating for your owners and even yourself if you need to move that much more difficult. So we want to try to stay away from them, but know they're out there and get in front. What do you need to pass one? You should have a checklist. In the next month, you should have a checklist from your manager that says this is what we need to do in the case of an emergency. We're not going to wait for a hurricane to figure out how do we pass a special assessment because 4 roofs got torn off and we don't have the money.
Yeah, so, and Keith, if I can add to that too, from a management, from a practical standpoint, you know, you really want to sit down and with your manager and your attorney and kind of figure out, you know, what is our financial health of the association, right? Where are we? What special projects do we have coming up based on our reserve study to begin with? How much money do we have in reserves? What type of excess, perhaps operating income, do we have? And what is basically our financial picture? And from there, go, okay, now do we have special projects that we need to do? Or is, to your point, Keith, preparing for an emergency? If something were to happen, what resources do we have already? Lines of credit with bank, for example, as opposed to a special assessment. There's lots of different things. So you really want to have, that fireside chat. I love that. Sit down and kind of peel back the onion and do some what if scenarios and then get the facts up front. I think that's great advice.
And to Fiona's point, buyers are much more savvy these days. They have a right to look at your budget. They will see things that perhaps maybe even as recently as 5 years ago, buyers wouldn't have been looking for. There are websites dedicated simply to educating buyers on what to look for with regard to a condominium budget. So I encourage everyone to kind of keep that in the back of their mind, that the buyer savvy is certainly increased. So let's talk about budgets. Budgets incorporate all of the expenses. The difference between a commercial corporation and your association, whether it's a condominium or a homeowners association, it is that it essentially exists to pay bills, and its only stream of income is assessments. We'll put borrowing and special assessments aside, but budgeting to meet your expenses over the course of whether it's a quarter or 6 months or a year, the income is from the assessment. So you have to pin down what are your fixed costs. So I had a ton of questions about what kind of cost increases are we going to see in coming up. Well, for those of you on boards that have amenities, it's a little bit of a moving target. You're going to need to make sure that you have the money to pay to clean and keep safe all of your amenities, whether it's the pool, whether it's the bathrooms, whether it's your clubhouse, whether it's touchpads for elevators, touchpads for security systems, gates, all of those things. I would encourage you to work with your manager to go and find a vendor that can help you give a bid to say, what are we going to spend on doing this and what's reasonable? Some associations certainly have higher use of their amenities than others, and you certainly want to take that into account. File that under my snowflake comment earlier. The use of your amenities will certainly dictate how much you're going to spend to keep it safe. So that's certainly one line item. Another line item that's in a budget we're going to think about going forward, I had a ton of questions about reserves. Now, reserves for condominiums. You have to fully fund your reserves. If not, you've got to have a membership vote to not fully fund. So I want everybody, I had a lot of questions about what do we do about reserves? Can we borrow from reserves? I don't advise my clients to borrow from reserves. If you need to borrow, we'll talk about lines of credit and banking, do that. But reserves is the greatest way to decrease the value of your units or your homes, because people know that cost is coming up. Fiona, you look like you were going to say something.
Yeah, I was just going to say, Keith, and if we can clarify, because I know that we get a lot of questions on the adopting the budget in a condominium. So as you mentioned, the board has to adopt a budget with fully funded reserves, and then the membership can vote to either waive or reduce or whatever. But there is that requirement, and if you're going to go that route, I think one of the questions we had was, if we go that route, how much should we underfund the reserves? Do we adopt the budget fully funded and then do a membership vote? I've seen this done where they'll do a membership vote to say, do you want to fund the reserves at 75% or 50%? And, again, you need to get with your manager, because you really want to educate the residents about, well, what does that look like? What is coming down the pike, from a preventative maintenance and a reserve standpoint? Do you have a roof replacement coming up? Do you have, elevator, modernization that needs to be done? Those are some heavy lifting items. And if you underfund the reserves and you're not going to have enough money to pay for those items, that's a problem. So it's definitely a conversation with your manager, the board, your finance committee if you have one, and then once you kind of get that picture together, you want to bring your attorney in and say, here's what we're thinking about doing, what are the right steps to follow?
So Fiona, we also had a lot of questions about how to determine how much to put in reserves. And there's a little bit of misunderstanding that sometimes exists. Florida law does not require reserve studies. Every 36 months, it requires an appraisal for insurance purposes, but it doesn't require reserve studies. But reserve studies give the board an objective look at all of the assets of an association, whether it's sump pumps, whether it's irrigation, whether it's elevators, whether it's your pool shell, whether it's your decks, to say, well, there's only about 10 years left on that pool deck. What's it funded at and what's it going to cost? So for those of you not familiar with reserve studies, I highly encourage you to get with your manager. The return of value on the education side of a reserve study is almost immeasurable. You can really learn a lot and you can start to plan. And then if you can fully fund your reserves in the budget and you can move forward. But I encourage everyone to really talk to your manager. You don't need to spend any legal dollars on that to go and head and get a reserve study. Fiona, you were going to say something?
Yeah, and if you could just clarify for us, Keith, because I know we get confused sometimes between an HOA and a condo. So,
Right.
yes.
Right. So those of you who are in homeowners associations, unless your developer set up reserves or there was a membership vote to establish reserves, you are not required to have reserves. Condominiums are required to have reserves for certain projects and things that cost more than $10,000. I don't want to get too much down in the nitty-gritty on that, but that's really the big picture view. We had some questions about reserves in a homeowners association, and I would encourage you to go. Sometimes you'll see you might have a 25-year-old HOA and you might see a line item on your budget that says reserves, but you don't know if that was established by the developer. You don't know if that was just simply put in there in the 90s. I would encourage you to try to find your records. If not, I wouldn't change it because you don't have the proof to say we're not going to fund reserves.
Right. And we have a live question that's come in, Keith, and it says, we have a 30-year reserve study. What is your definition of full funding? Clearly, we don't have a reserve balances today to cover 30 years of planned expenditures.
So that's a great question. It's really, so if you have a $10,000, if it's going to cost $10,000 to replace your pool deck, and I'm just using round numbers here, it's not 30. It's not that it's 30 years out. It's that you have to look at it. What's it going to cost? What do I need to fund it to fully fund it for that year? Does that make sense? I hope. And if I didn't answer that question fully, please respond to Fiona. But you've got to fund the reserves fully funded for that year. Oftentimes, so it's a fraction of a fraction.
Yes, and typically if they have a reserve study professionally done, there will be a 30-year chart that will show
right.
you, in 2020 you need to fund this much, in 2021, 2022, and it'll go all the way through, and that's what's considered fully funded. So in a condo, if for 2020 the amount is, let's say it's 100,000 is what the reserve study says you need to fund for that year, then the board would be adopting a budget with fully funded reserves at 100,000, and then there could be a vote of the membership to say, you know what, we want to fund at a 75% level, for example.
Right.
Yeah. Okay.
But it's not $100,000 in year one.
Yeah.
It's what is it for that year over the useful life.
Yes.
So, and this budget really is, doing a budget like this and paying attention to your reserves and looking at your minimum fixed costs is really the way to give your owners a soft landing if your budget needs to change, rather than staying away from special assessments. This is also this is also a good time to look at your contracts for any of your associations. And I encourage everyone to use your manager. Your manager should have a USB stick or a binder of every single contract that your association has entered into and is obligated to pay, whether that's landscaping, the pool guy, whatever. If you need to cut costs, I would encourage you, maybe this is a good time to go out to bid. Maybe this is a good time to renegotiate with the services. And let me say something that I neglected to say earlier. The reason that we're going over all this, and this is a good time to drill down, is because I am anticipating an increase in your delinquency rates. So getting a handle on all of your expenses now, knowing in the back of your mind, working with your manager, areas you can cut in the event that you need to, is why we're having this. But I am as of yesterday, I believe that the Fed said that they expect unemployment to continue to stay at these rates for the next couple of years. So it's good timing for today's. I think it's terrible for our economy, but for you board members, certainly think that you need to anticipate that. So again, vendor negotiations is critical. And I don't know if there's anybody in the audience that doesn't have a manager, but if you don't, and it may seem kind of counterintuitive to go get one, but a good experienced manager will help you navigate this much, much better than you can do on your own. Fiona, you were going to say something?
I was just going to say one of the questions that we had that came in is asking about special items related to the pandemic and what we sort of foresee in the 2020 budget year. And you hit on some of them in the beginning about the extra staffing that you might need, et cetera. Do you need extra staffing to do amenities? Another big one is insurance. We were chatting, right. Keith and I were chatting a little bit before the call about what we're seeing in the insurance world and what's going to be anticipated. So don't shoot the messengers, but we are seeing 15, 20%, 25%. I don't know, Keith, if you wanted to add, you had to chat. It sounded like with an insurance agent as well.
So earlier this week, I spoke to one of the largest insurance brokers for condominiums in the Gulf Coast of Florida, and he said, look, 2 months before we had COVID started, you're going to have claims regarding personal injury and workers' compensation. Insurance companies going to get battered just from COVID. Then we had civil unrest. We had property damage claims, which are happening all over the country. And then hurricane season started. So before we even got to hurricane season, we have a battered insurance industry. And I am not advocating for the insurance industry. I'm saying that as an explanation to anticipate these 15 to perhaps 35% increases for your insurance costs. This is another line item in your budget. Work with your manager. If you need to go out to bid on your insurance, I encourage you to do so. And what do you need to insure, and what are you insuring it, and what rate are you insuring it at? Those are really important items because your insurance, that's probably a substantial portion of your budget. And another item talking about the pandemic is, what are we going to do if there's a resurgence, if there's another shutdown, even a partial shutdown? I think you have to anticipate increased delinquency rates. One of the ways to get in front of delinquency rates and to anticipate what your budget should look like for next year is to work with your manager and look at your historic rates of delinquency. Are they 1 or 2%? Look, if you can, go back 60 months and say, what does it look like and what trends do we see? If you've had your manager for a long time and you've got older ledgers, go back to the last time we had a downturn and see what did the peak look like, and then look for trends. Again, I encourage you to kind of get a baseline at this time to understand what your delinquency rates look like so that you can start to see increases. And there is no playbook for this, but you can get in front of it by paying attention to your financials and getting with your manager to say, where are we seeing these increases in delinquency rates? Because they will happen if you're not seeing them already.
Yeah. And Keith, we had another question come in regarding guidance for HOAs and condos on using resources for current or future situations. The question is there a benefit in spending reserves versus pledging them as collateral for a loan? So I think the question is, do we use our reserves or do we go get a line of credit?
Again, I think that's going to depend on association to association. But yeah, if you have, let's look at it from a life and safety standpoint. If you have a roof that needs to be repaired and you have reserve funds, you got to fix the roofs or you're going to have other problems. If it has to do with life safety and it's a reserve item, spend the money from the reserves and you just put the money back in by funding your reserves. Now, you brought up another question about borrowing. This is another issue that the boards can get in front of now to do the legwork. Have a relationship with a banker. There are banks in Florida that are very experienced in this world to lend to associations. And typically the collateral for that isn't your reserves, it's the ability to assess. So if you need to borrow $1 million, you can really do that. You spread that cost out over 10 years at a very good interest rate. That's a good way to go. But you don't want to wait for a hurricane or another shutdown if you don't have a reserve item and you have a life safety issue. Borrowing is a good way to do it because you can pay $15,000 or $20,000 a year. It's a smaller cost per door over time, and you keep the units safe.
Great. Yeah, and we see that a lot, especially when we do have, the big name storms come in, and we've had some communities that have been, hit pretty hard in the Keys and even in the Bonita Springs area in recent years. And a line of credit or something like that is something definitely that we can help with and get that set up, as opposed to special assessing.
Right, and get in front of that now. Get with your manager, find a banker, go meet them, get all the paperwork filled out. I'm not telling you to borrow, but have it ready in the event that you need it. And this goes back to Fiona's comment earlier, kind of doing a well check on your finances. If you were struggling before, you may continue to struggle. Now's the time to address it.
Yeah, and then we had a couple of questions, Keith. We had one saying, homeowners have a perception or a belief that because amenities are closed, that our, maintenance fees are going to, drop dramatically. And I can speak to it from a management standpoint, a practical standpoint. We've had real situations that met multiple communities where, yes, amenities were closed. However, the expenses actually went up. And so in our tower communities, you see expenses going up, because more people are home. And so the water bills are higher and the trash bills are higher. We've had to hire, more staff. And in cases where we've actually had, verified COVID cases in communities, we've had to do extra cleaning. So there's actually been extra costs. So again, I think I'm a big believer in trying to educate the residents, and, all of you people that are on the call, all you board members who, give so much time to your community, you probably remember when you first joined the board, you went, oh my gosh, I had no idea all this went on behind the scenes. And so you have to kind of remember that your residents, they don't know what they don't know. And so educating and communicating is a big part of this process.
Right, Fiona, that's a great, and actually Fiona and I had not talked about this, and you'll see in my notes, the amenities are closed for health and safety reasons. They're not closed so that we can try to save money. And it's important that the board speak as one if you are approached by an owner. And by the way, those of you who are on the call today who have been on the board through this and have dealt with owners complaining about the shutdown of amenities, I thank you, and your patience and perseverance will be rewarded. You kept everybody safe. I think it's important, to Fiona's point, to have almost a talking points about, we had to shut them down. Some areas it was required with regard to pools and tennis courts and health facilities. And we're trying to keep people safe, whether it's a tower or it's condominium units that are in groups, the medium-sized buildings, or busy HOA amenities. We're trying to keep people safe. So, and I think this goes, that's a segue back to my point earlier, that the expenses of an association are pretty much fixed. And then you add the layer on of having to keep everybody safe because we're trying to avoid personal injury claims from Morgan & Morgan. We want to try to stay in front of this. You want the amenities open just as much as anybody else does, but we're not going to put anybody at risk. That's what our advice has been. So I think if you approach the response from a health and safety standpoint, it will be and if everybody speaks with one voice, I think that's really, really important.
And I have one of our friends here at the Castle Home Office just typed in, Stephen, who's the head of our accounting department, just wanted me to clarify that condominiums reserves cannot be used as collateral for a loan. Just wanted to clarify.
Yeah, I didn't even want to suggest that.
Yeah.
So
yeah, I think that I read that as that was one of the questions, but I don't think I was clear in my answer. So thank you.
Sure. So again, we're going to look at our delinquency rates. Let's talk about delinquency rates and payment plans. We want to be compassionately aggressive. So you will see I had later on, I have policies. This is a really good time for the association to address all of their policies, whether it's their collection policy, their violation policy, board social media policies. You want to approach you want to go into this potential downturn with collections with a policy, because as you negotiate or your lawyer negotiates with owners, it's not about the person, it's about the policy. So we keep it out of the personal realm, and this is what we need to do to pay our bills. I encourage associations to be flexible with a payment plan to the extent that they can, and sometimes they can't. They're running a shortfall on a month-to-month cash flow basis. You've got to be a little bit aggressive, but make sure you've had your talk with your lawyer and your manager regarding the tone and the culture you have regarding collections. I think it's really important that the emails stay polite but firm, and that the communication between your manager and the board and the lawyer regarding collections, that everybody's on the same page. Because what's going to happen is you're going to see a ramp up, and then during that ramp up, the amount of the delinquencies are going to increase, your income is going to go down, and then owners are typically going to be in a position where if they could pay, they would, but they can't. So they're going to resort to legal means to try to not pay. So a good collection policy will thwart virtually all of those issues. Fiona, you look like you were going to say something.
Yeah, we're getting a lot of questions on the management side about this, and really the message is it's business as usual. And
Right.
To your point, every association should have a clearly written collection policy, and follow that process, because we all have hearts and we feel terrible for anyone who's hit tough times, pandemic or not. And it's very critical for associations to treat everybody the same and give everybody the same, respect and process, and walk
Right.
them through
Right.
that process. And when you have a clearly defined collection policy, that makes that process that much simpler, and keeps, quite frankly, the boards and the committees, nobody wants to be the ogre, right? So if you're following the policy, you can feel good about that.
Exactly. It's not about you. We're treating everyone in the community the same.
Yeah.
It's really important. If I haven't said that, I'll say it again. Get with your manager and get a good collection policy in place, because you want to reduce the drag on the association.
Yeah.
And
we have, sorry, Keith, we have a couple of questions that have come in live that are around budget still, so I want to make sure we
Sure.
get those. We have one that says, is there a budget increases threshold that may require additional actions by the board, i.e. an owner vote, and what are the requirements?
So that's the
Condo versus HOA.
Right. Well, that's the snowflake question. There are statutes that apply, but you also need to pay close attention to your bylaws and your governing documents, which may have different or higher standards than what the statute says. So get with your counsel, get with your manager, and I would suggest that you create a cheat sheet for that very question. I can't give a more detailed, because it's such a broad question, but this is more of your fireside chat with your documents, and you want to I would invest some time with your lawyer saying, what does that checklist look like? That's another area. Fiona, I'm sorry I can't answer more specifically, but
great.
certainly it's very document specific.
Okay, perfect. And then we had one other question that was kind of around, again, how much is the right increase every year, and should an HOA or a condo be increasing fees every year? And I can tell you, my standpoint is you don't increase fees just to increase fees. We should be doing a zero-based budget every year, and what are the true expenses for the association? What are the needs of the association? Again, what does the reserve study say? What projects are coming down? What is the overall financial position of the association? And then from there's your budget, and that's going to give you that answer. So.
Certainly. And for those of you, I don't know if there's folks online who have recently turned over from a developer, say within the last year or two. There sometimes can be a little bit of a budget shock, because the budget might not really truly reflect what the expenses are. So again, I would encourage you to get with your manager, look at your expenses, where are they, and what can you do to control it? They may have been putting mulch down 4 times a year to keep it pretty for sales, but you may not need that. So I encourage you to kind of do a deep dive. This is an opportunity to do a deep dive into what your expenses look like. So I want to keep going back a little bit related. I just don't want to skim over this. Another issue regarding to having a strong and enforceable collection policy will also help prevent any lawsuits against the association from a fair debt collection practices standpoint. This is sometimes you may hear about this in other seminars, but we are certainly always, as your council, we are always looking to keep the members, to treat them fairly and to stay away from potential plaintiff suits regarding collection. As some of you may or may not know, homeowners assessments and condominium assessments are considered consumer debts. So there is a mountain of statutes that apply to the collection of those debts. And when I spoke earlier about owners using legal means to push back and try to thwart your efforts to collect, that's one area that's growing in our industry, where we see people trying to avoid payment by using fair debt collection practices laws. Fiona, you were going to say something?
No, I'm sorry. I'm just looking at the questions coming in, jumping around here just a little bit, so I
Sure.
apologize, but we've had a couple that are the same, and they're talking about having a separate line item in the budget for pandemic costs is one, and two, how do we budget for extra staffing if we don't know how long the pandemic is going to go? So there's a couple of those grouped together.
So for those of you who have employees and amenities with, you have amenities, it's going to depend on your association's relationship with the person. Is the person contracted through the management group, or are you employing them directly? So
Yeah.
There's certainly going to be some, I'm anticipating some increased costs of your payroll burdens because of increased costs to the insurance and other issues from your management group. But if you're employing them directly, you're going to certainly want to look at that and on a case-by-case basis. It's really, that's the snowflake. Everybody's going to be different.
Yeah, and I can tell you just some general best practices around that. So, if it's, every association is different, to your point. So some associations are seeing, just a little bit of extra cost, and others are seeing quite a lot. So similar to when we have, a storm or some kind of event at a community, you absolutely can start to code and create a general ledger line item for those particular costs. So when a storm comes in, we might create, whatever the name of the storm is, a GL line for that particular item, and anything that goes, any expenses you had for that storm, all get coded to that GL. So you can think along those lines for pandemic costs if they are, I'm going to say, substantial. And then as far as staffing goes from a practical management end, Keith is spot on. You want to look at, how long do you think it's going to go? And it is somewhat a bit of a throwing a dart, right? And can you use a vendor? So if you have a security vendor, for example, can they just bring an extra person on a temporary basis? Or is this something where we actually need to increase, maybe a team member from part-time to full-time, or actually go out and hire somebody else? So it's very community specific.
And to the point, I forgot that part of the question. Thank you, Fiona. With regard to line items in the budget, it goes back to my elephant. We're going to take it piece by piece. I would encourage everyone to look at the issues for your association. What do you own? What needs to be cleaned? What does your maintenance look like? You can increase those particular line items without making a separate pandemic, quote unquote, line item. I think that can get a little bit unwieldy without knowing what are you actually trying to address. Identify the issues that you need to address. Have your manager go out and get some bids. Say, we're gonna use ServPro. We're gonna clean once a week, whatever the case may be, so that you can add line items for that, so that you can answer honestly to your members of your association. Say, look, we went out and we looked at and we assessed all of the assets that we have, and this is what we think we need. So
Right.
It maybe not necessarily, I think you could have a pandemic line item, but just understand what's behind it.
Exactly. Yeah. And we've had a couple of questions come in regarding specific banks and doing loans and which banks will do loans for HOAs. So that again is a very specific thing. But what I'm doing for those questions that are very community specific, we're saving those off to the side, and our team will follow up with you directly and make sure we put you in touch with the right people.
Right. We have people on the call all up and down the Gulf Coast, and so we can, and I'm happy to help on that too if anybody has any questions. So I've done that many, many times.
Perfect.
It's important to find a lender who does this area, not just to find a big bank that may not be familiar with how to use assessments as collateral.
Exactly, exactly. And typically, as a rule, you want to look to whoever has your lockbox. That would be the first place to go because they're the ones, receiving your assessments. But we definitely will get you that information. So hang tight. We have another question that came in regarding it says we have a small budget for bad debt expense. Should that be increased? And if so, would you recommend a percentage of the budget? So I'll tell you from a management standpoint, when we're looking and we're budgeting your bad debt, we're looking at your current delinquency rate and how much of that is more than 360 days old. And we do a calculation to determine that. And then I think to Keith's point prior, you want to look at, if you have it, what has been the history of your association when hard times have come? What were your delinquency rates? And, where is the association as far as, if that was back in 2008 and you had a lot of investors that were owners there, has the demographic of your community changed since then? So that's, again, I think, a great chat to sit down and kind of peel back that onion with your management team and go, okay, what do we think worst case scenario may be? And what trends do we have? And Keith, I don't know if you have anything to add to that.
I just wanted to add, kind of related to that, we had a bunch of questions, Fiona, on deferring assessments. And I'm gonna point everybody back to what we said earlier. Have a policy, enforce it, and it's really business as usual. And I would encourage you to stand behind your manager and your lawyer who's handling your collection efforts, and to keep pushing forward, because there's a lot of, I lived through the last downturn, and there's a lot of unintended consequences from quote unquote deferring payments, because people start to get into holes they can't get out of. And I had a really good question, Fiona, that was kind of related to this, and I thought it was very interesting. Somebody asked about, foreclosure is unattractive. What other options are there? Well, unfortunately, there aren't any. But as I said earlier about creating, compassionate, aggressive policy, many of you may not know that what saved a lot of communities during the last downturn was association lawyers getting in front of the banks for foreclosure, and those units going to third parties. You may not like renters, but it's way better than having zombie units. So I'm sure Fiona has a lot of experience with that. But foreclosure for an association can be very positive if done the right way, and it moves very, very quickly. Because if somebody gets behind in their payments and you follow your policy and you get the lawsuit filed and you foreclose on the unit, whether it sells to a third party or the association takes title, you can rent it and have some income stream. But even more important than that is not having a unit just sitting there with its grass unmowed or nobody ever going into a condominium unit, because that's a recipe for disaster. Fiona?
Yeah, it's a great point too. The other thing we want to do is when someone does become delinquent, is we want to investigate that and see, is there already a tenant perhaps,
Right.
In the home? And if so, there is, I can't remember, you would know better than I, Keith, is it 1096, some law where the association can collect the rents on behalf of the owner? So essentially a letter
Right.
goes from the
That's
attorney,
correct.
yeah, to the tenant and to the owner that says, look, the owner's behind, and so effective immediately, your rent needs to come to the association. Go ahead.
You certainly want to investigate all of those, and I would encourage everyone to, if you have counsels, certainly consult with your lawyer.
Yes.
Regarding the collection of rent from owners. It can present other sets of problems. It seems like a quick solution. It's out there, and the statute is certainly there, but it has unintended consequences with respect to the violations of the Fair Debt. The law, the state law and the federal law with regard to rent really doesn't mesh well.
All the more reason to speak with your counsel.
Yes, I'll say that repeatedly. So
that's why we have, and I love that. That's a great example, right? Because from a CAM manager standpoint, we see all sorts of things, but we're not experts in everything. So definitely, all of these things we're talking about today, don't just go execute on your own. Make sure. Many of you who joined our prior webinars where we talked about, opening and closing amenities and then opening them. And we always said, okay, once you got the plan together, make sure you consult with your association council, because you want to make sure you do it right the first time.
And that brings up another point. That certainly would be an increased cost if you're consulting your council more and more. I think I lost track of the amount of executive orders
Right.
that Governor DeSantis issued, and I was reading them and advising my clients at no cost, just to keep everybody educated. So I would certainly, with regard to your budget, another line item that's probably going to need increasing is your legal budget. So I would encourage everyone to get with your lawyers and find out, what do you want next year to look like? Or were you working on a special project? Were you working on rewriting your documents? Were you trying to pass an amendment? You may want to put that to the side and say, hey, we're gonna build a little bit of a fund here in case we need your advice or something goes wrong. So did you have something, Fiona? I'm sorry.
We have a question that came in regarding collection policies, and it says, can we share a sample collection policy after the meeting? So absolutely. Again,
certainly, you can contact me or Fiona, and I'll be happy to walk you through it.
Yeah, we've got that, and we'll definitely get that out to you. No problem.
And kind of related to that, it's a little bit of an aside. On policies, it's important, and this kind of came to the forefront really in the last week or so, having a social media policy and having a violation policy for your boards, because I said it earlier, and I'll say it again, you want to reduce drag. You don't want to be dealing with social media, people saying things on social media that can be attributed to the association when it may be someone's personal opinion or how they act in a meeting, or violations. We've seen hundreds of inquiries regarding graduation signs. I'm sure everybody's probably laughing right now. What do we do? What do we do? Yeah. I would encourage boards, if that's not been an issue in the past, and it is now, you can think about passing a temporary resolution until we get through this, so that, but stick to your violation policy as you did before, so that there's no special treatment. Go ahead, Fiona.
And I was just going to say, certainly from our standpoint, from a management standpoint, our best guidance is, social media has its place, but the association should have one source, and typically it's the association's website, and that would be the source, an area where residents go to get information that is sanctioned by the association and by the board. And so you don't want to train your homeowners to think whatever they read on Facebook is actually what happened at the board meeting, right? So the real meat and potatoes needs to be on the association website is the best practice, if that's the route you're going to go. And then board members, our guidance would be, you shouldn't be commenting, via social media, because you again want to have one source of where the information gets disseminated from and to the residents, and you don't want to have multiple sources.
Fiona, I want to shift gears, and I'm happy to take questions on reserves and budgets all day, but I did want to touch on, there were a lot of questions about the pandemic and having meetings. So those of you who are in condominiums, the law is different for condominiums than it is for homeowners associations, and there's different types of meetings. As I'm sure all of you are aware, you've got your regular ongoing board meetings, and you've got your annual meetings for voting. For those of you who don't have e-voting, this might be a good time to consider e-voting. The law is pretty well developed on it right now. I've implemented it for some large association clients of mine. I'm sure Fiona has too. Get with your manager. It's fairly inexpensive to run. It may be a little bit more expensive at the beginning, but once you get everybody on board, it's a good way to save money and to really have a good audit trail of a vote. Fiona?
And I was going to say, it also typically increases participation, which is always a good thing, right? So, especially now in these times, but hopefully when things get back to normal, even then, it'll still be great for our residents who maybe have multiple homes, or they're snowbirds, whatever it might be, they can still and will hopefully participate more because it's that much easier to do. It's also been phenomenal using electronic voting for if you're doing any kind of amendment changes.
Right.
It's been very, very powerful. And the old days of knocking on everyone's door and trying to explain to them, what the amendment's for, et cetera, it takes all of that away. And we've had some great success with it.
That's a good point. And to that point, there were a lot of questions I saw about budgets, about how do we get budgets out? Can we use electronic means? First, I would say, everybody, I encourage you to talk to your counsel about that, but the law requires the budgets be mailed. That's not going to change anytime soon. I want everybody to make sure that they understand that the snail mail method of some of this stuff and in-person meetings, particularly for HOA annual meetings, is still out there. The law simply hasn't caught up. Fiona and I were talking about this offline earlier this week about large-scale homeowners associations. The law doesn't allow for some sort of a virtual, quote-unquote, annual meeting. So you still got to have a physical presence. You got to have a way to keep everybody safe, and you got to have a way to count the votes and encourage people to participate.
Yeah, and we're seeing some creative things going on out there. So in the HOA world, we've had meetings and they are doing, dropping off your ballots beforehand. They're setting up in the parking lot. We've had, drive-in type scenarios where everything is set up outside. And we've also had some indoors ones, but we're limiting the number of people that can actually, be in the room. You have to have a mask, etc. And again, I think to Keith's point, every association is different. So if you typically, if you have a big ballroom and you typically only get 50 people that come to your annual meeting, you're probably fine, right? You can social distance and you can set up a loudspeaker so you can use, open the windows and the doors and have people even sitting out by the pool, they can still participate. So we keep saying it, but get with your manager and try to, walk through that process. We are seeing more and more board meetings being held via Zoom, and that's new, that's now the new normal. And we're seeing more and more it being a combo. So the meeting is available via Zoom, but they're also, having, certain board members, actually in the clubhouse. And some people prefer to come in person, and again, totally fine if, with masks and they're socially distanced.
And that hybrid can work in a lot of situations. I would encourage you to get with your counsel to perhaps draft a policy that says this is what we're going to be doing for the short term or medium term in the event. I know that it only takes one owner to say, well, I don't see where you can do that. And you certainly, again, I hope to have my clients avoid drag, having to deal with administrative stuff rather than dealing with, making the association and keeping track of the assets.
Right. And Keith, can you speak a little bit to the electronic, if an owner has consented to receive everything electronically?
That's a double-edged sword. So there are only certain notices. So for instance, you may get an email blast that says, hey, there's going to be a social in the clubhouse this afternoon. That doesn't mean that person has consented to receiving notice electronically for what are the required statutory notices in the statute. And Fiona, I have kind of a love-hate relationship with email, but having an email list for the association can be very tricky because some owners will use that as a sword by making official records requests and going and building their own database of owners to essentially create their own email blast to spread certain truths, or non-truths. I am still a big fan of snail mail for official notices because I can get the green card returns. I can prove certain things. But Fiona, yes, people can, and perhaps that's just me showing my age, but perhaps that's probably where it's going, is more and more people to consent to receiving official notices from the association.
Right. Yeah. And I think your point is there's positives and negatives, and again,
there are.
Talk it through, because every association is different. Talk it through with your team, your management team, and your association council. And on that note, we had a question regarding, what can we do if someone has created one of those, email chains and they're e-blasting stuff out that isn't sanctioned, or unsanctioned Facebook pages. Do you have any thoughts on that?
Typically, your documents have language. Almost every set of documents, even if they're older, have documents that says nobody's allowed to use a likeness of the association to create an ambiguity to suggest that this is not, unless that particular, whether it's a social media page or a web page, says this is not, in bold-faced font says this is not associated with the corporation, XYZ Homeowners Association Inc. I would contact your lawyer and have them send out a cease and desist, because Fiona's point, and that goes back to my earlier issue about having a social media policy for board of directors. On the other side of that is controlling the message from owners who just want to tell their side of the story. And I have probably been I have been a proponent in the past of kind of ignoring the noise. I'm having trouble more and more with vociferous owners speaking out, whether it's the truth or not. I encourage boards to get with their counsel, get with their manager, and draft a response to things that simply may or may not be true. Because if there's a vacuum of information, that misinformation will fill it.
Yeah, and it's a great point, right? I mean, I think about the old days, and everyone would get together around the pool, and Mr. Jones would say, did you hear the board did this, or whatever it might be, and the next thing you know, everybody's talking about something. And so in the old days, that would sort of filter up, and the board would not necessarily address that particular owner's statement, but
Right.
just sort of again, communication, right? So you don't have to say, hey, we saw this on Facebook and it's not true, and I wouldn't recommend saying that. What I do recommend saying is, we just wanted to get, some information out, and here's what's going on with the, tennis court, project, or whatever it might be. Just keep the communication flowing, and again, training people that what you see on the unsanctioned page is not what is going on in the association. What's going on in the association is what comes directly from whatever the sanctioned communication method is.
So I often see, and Fiona and I have talked about this, I often see problems in associations that aren't necessarily legal. They probably have very good documents, very good bylaws, very specific, very good rules and regulations. They have cultural problems. And I encourage you to perhaps address some of those cultural issues with your counsel and your manager and say, hey, you know what, this is what we're going to do. There's methods. So for instance, if the fences in your neighborhood are getting out of control and people are just putting them in, but the declaration says they have to be a certain height and a certain material, but it's not being enforced, there's ways to deal with that going forward. And that's just one example, but that applies to collections, that applies to all sorts of operations of the association. I see the questions are rolling in there, Fiona.
Yes, you can see my eyes wandering. So we've got one that's asking, are we required to have monthly meetings during this pandemic?
You're not required, but it's important. Well, first I would say check your documents. Some documents require certain meetings. I don't know yours, but to the extent the association, that's a really good question. And I'm going to answer it two ways. One, no, you're not required, but check your documents. Two, how are you going to conduct business otherwise? Because if you get a bunch of board members, you're going to have together, you're probably going to end up with a quorum, which is an unnoticed meeting, which is prohibited by law. And you're going to make Fiona cringe. So help her out, and let's not do that. But if you really need to address something, and somebody's in Tahoe and somebody's in Syracuse, and you really need to address something, you can take Chapter 617 has emergency procedures. You can do a unanimous resolution, whatever it is, fix the concrete, take down the oak tree, whatever it may be. You can do a unanimous board resolution to address it. There's probably more than what you wanted to know, but it's very important that all the board members on the call today go back and look at the actions that you took over the past couple of months. And if you did not have a properly noticed meeting, you need to get with your manager and you need to get with your counsel, and perhaps thinking about passing a resolution ratifying those activities, because and you need to memorialize what you did and when you did it, because people are going to have short memories and be like, well, we weren't closed at that time. Well, yes, you were. So, Fiona.
Okay, we have a clarification question. She says, can you clarify, can an HOA use email to send out the budget if the owner has given consent? So
it depends on what your documents say. Your bylaws will dictate how budgets are when and how they're supposed to be transmitted.
Right. Okay, and then we had a couple more budget ones that came in, and we're about to run out of time, so I'm going to jump back to those. I'm going to put these kind of two together.
Sure.
What will be different from the normal in the budget process, which we've talked, I think, a little bit about already, but if social distancing goes on for the rest of our fiscal period, will Zoom or something like Zoom be the method of choice for presenting our budget?
No, you have to follow your documents. If the documents require that, when you say present, I'm not sure what that means, but when you say present, if your documents require a mail out of the budget with an agenda 14 days before a meeting, and let's talk about an HOA for a moment, that's what you've got to do. That's the kind of this area of the law the area for the law of Chapter 720 is not built to deal with this right now. So you've got to get with your counsel, get with your manager, do the mail out. And then if you got to have the meeting to present the budget, make sure that everybody has an opportunity to participate, because remember, they have an opportunity to participate in the budget meeting. And the last thing you want is a lawsuit saying you didn't pass that budget properly, because it'll slow you down from collecting assessments.
Yeah, and if I can just add to that, so I think what we're saying is it's really the same requirements as far as just because there's a pandemic, it doesn't mean that
Right.
you don't have to, follow what your documents say as far as meeting notices and mailings for, condos and HOAs. What we're seeing, because from a Castle standpoint, we actually had our budget season has officially started, and we had our budget meeting with all of our managers this morning. We did a webinar, and we are anticipating that we will see more Zoom. Just forget about budget, just from a regular board standpoint, there will be more Zoom type meetings, and but it'll be a combo. So it'll be, in person and available on Zoom, and you'll have to get creative and get with the association council before you mail anything to make sure
Right.
that it's in, in good shape, and measure twice, cut once, as we like to say, right?
And it's really important having that audit trail, particularly if you know you're having a contentious election coming up. Make sure you get with your manager. Is the meeting going to be well staffed? Who's going to do the counting? What do the proxies look like? Are they appropriate? Because with less people in the room, there's going to be more opportunity for people to accuse someone else of not doing the right thing.
We've had someone who's asked for a social media policy, so we definitely, again, we'll reach out to you after this directly, and we'll make sure we get you some samples, not a problem. Let's see. We have a question regarding USPS certified mail return receipt green card is a false requirement. I think the question is there any requirement of Florida statutes requiring this?
There are certain portions of the statute that require certain mailing to be certified.
Okay, yeah, so again, specific, we'll have to, can't give you a complete answer on that one. It's a very specific question. We have about 2 minutes left, Keith. Anything else?
Let me just say that. So there's what can you do, and I know that some of it has to be certified, and then there's what should you do, because the association, I approach a lot of this from the standpoint of keeping associations from getting sued and having a good defense to anything. If someone says to me, I didn't get my demand letter, for instance, well, somebody in your home signed for that, here's the green card. It eliminates drag on the association. And that's really what today is about, is getting in front of anticipated issues that you're going to see. I know you're going to see them.
Excellent. Well, we are out of time, guys. Thank you so much, Keith, for all of your time and expertise today. We really, really appreciate it. Thank you to everybody who joined us today. We will follow up on the questions that we were not able to get to. We covered a lot of ground today. We did mostly budget, but we got a lot of other questions that came in that actually weren't budget related. So we got a little off track, but I think it was productive for everybody. And we appreciate you being here. And maybe we'll do this again, because we still have questions rolling in.
Yeah, I see that. If anybody has any questions, they can feel free to email me offline.
Okay, excellent. Well, listen, thanks everybody. We appreciate you being here. Stay safe, be kind to one another.